Hello, this is Wilfred Hahn, Chairman and Chief Investment Officer of Hahn Investment Stewards. We'd like to bring you another brief update on markets and portfolios for the previous month, that being February. January this year was a great month. Started off with a bang, some pretty extraordinary returns for markets overall, and particularly our portfolios. And we had mentioned in that month's update that we expected a little bit of a reversal because it simply was not possible that returns could stay at that kind of pace for very much longer. And so in fact in February we did see some of those reversals, but happily they weren't very deep. So yes, some significant changes in performance, but all the portfolios still had positive returns for this month. What changed last month was that bonds started to take a breather. Earlier this year, both asset classes, equities and bonds, had performed quite well in line. Then in February, bonds have not done so well, took a bit of a breather, as I said. However, equity markets continue to stampede forward, some new highs all around the world, certainly here also in North America, not yet in Canada. But returns, for example, of 4% were experienced for the Canadian equity market in February, and similarly a 4% in the US. And importantly, a new trend here that we're seeing recently is that some of the international equity markets have done better, particularly Japan, and the Japanese equity market in Canadian dollar terms has also returned a little bit over 4%. Now, we always like to look longer term and not focus too much on shorter term trends, but certainly do want to report on them. Always important to look at the longer term track record, and at least on a 12-month basis here, I think that's a bit of a more illustrative perspective. Performance has been very good over that year to date, or I should say 12-month basis. And importantly, equities here in Canada have performed neck and neck with fixed income markets, both of those categories returning over 10%. So it has validated the approach that we've taken over the last year or so of being pretty much benchmark in terms of our asset mix. That has performed best. One more thing to mention, commodities continue to be in a downtrend, and that didn't change this last month either. Gold and overall energy prices continue to fall. Some of them actually had a bit of a rebound, but nonetheless, seen over a 12-month perspective, that continues to be a big theme, commodities on the downside. And of course, the currency markets have been quite active. The US dollar sharply rising against the Canadian dollar over the last 12 months, and that's been a big contributor to the international asset returns in our portfolios. Well, I want to talk just a little bit about currencies here a little further. I had mentioned that the US dollar has been a pretty big contributor to Canadian dollar domicile returns. And something is changing though. The Canadian dollar has fallen very, very substantially, as everyone will already know. The Canadian dollar was as high as 110 versus the US dollar way back in 2007, and recently fell through 80 cents, so down to 78 cents or so. And one of the things that we're starting to see here recently is that the Canadian dollar is starting to hold in against the US dollar. And more particularly, even though it has continued to fall against the US dollar in recent months, it has been running in line with other currencies around the world, particularly the euro. So it's really much more a US dollar story. And Canada, it's not in a currency crisis, it's not in a liquidity crisis or anything major wrong going with it. So one would have to conclude here that the Canadian dollar is very near a bottom, and we're adjusting our active strategies accordingly to that view. We had been very negative on the Canadian dollar now for quite some time, a number of years, and that's played out very, very well. But what we're just saying is that trend is very likely to change sometime soon here. I'd like to next turn to the portfolio results, and you can see them up there in the chart. We're just showing you the three core portfolios here, not including the international opportunity focus and some of our globally oriented portfolios. We always tend to show these three as these are the most commonly prescribed to our clients, and you can see that performances following that very strong January has continued to be positive. We're slightly lagging this quarter, but probably this month, which isn't surprising given how far we outperformed last month. And in fact, if you look at the 12-month numbers, our performance has done very, very well for all of our portfolios sharply outperforming their benchmarks. Finally, just wanted to come back to a common theme. We're just coming up to our next strategy meeting sessions for the quarter. That happens in a number of weeks. So the next presentation we do of the monthly update will update you there as to any significant strategy changes. I had mentioned that we're pretty much keeping our portfolios very diversified, well diversified between equities and bonds, not really taking a strong position on one or either of those asset classes. There's more asset types that we own in our portfolios, but nonetheless, those two basic ones, we've been pretty much tacking it down the middle, and that we think continues to be the important way to go. And as that chart shows that we have here for you, there's some short-term volatility, and it's pretty high, so it's really not a big percentage in trying to be too active in moving around the asset mix at this particular point in time. So we're continuing to keep a broadly diversified portfolios. Finally, if I may mention here at the end of this presentation, we have a number of publications again out recently. I'll point you to one that I wrote, What is it good for debt? Some surprises. I think you'll find that very, very interesting. Please access our website to see that. And also, my colleague Tyler Morty, president of Han Investment, wrote a piece here recently on Japan. Be bullish on Japan with small cap ETFs. And that one had some very, very broad publishing. Again, thank you for joining us, and we will see you next month at the next update. Goodbye.